The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi, folks. Basil Chapman sitting in for Larry Pesavento. And so let's just do a couple of things. In my last hour, my usual time, which is the Tiger Technicians Hour, 11 o'clock till noon Eastern Time, same number, 877-927-6648. I went through a whole bunch of things, but I've had a number of questions on my emails. If I would go through different aspects, which I will look at now. That's number one. Number two is, in this particular show trade, what you see, I'm going to go through a couple of patterns that have shown themselves to be quite potent lately. One is, I'll go right here to the Dow chart, right there. In the Dow chart, we've got a trading range that's been set up between 16,000 let's go with 16,510. 16,505 was the last high, and a base of about 16,200, but 16,046 is really the low that is really, these levels are very critical. I would even go to say that 16,588, the all-time high in the Dow made on December the 31st, besides being really unusual to have gotten there 3 months ago, it is exactly today 3 months ago, and to still not have an all-time high, while the S&P has gone on to a new all-time high, the Qs have gone to recovery highs, New York Stock Exchange has gone on to an all-time high, IWM, the Russell 2000 has, that's unusual. So that divergence, the only time we can go back to a divergence like this, and I see, I'll say this, but I'm beginning to see the signs, but right now there are no signs that replicate anything other than some kind of similarity to the January 2000 high, January 14th, and the March 28th, I think it was, a high, or last day of March, a high in the S&P and the NASDAQ back in the year 2000. We've also got a rotational market going on. And what does that mean? That means that certain sectors that have been really poor are just coming to life, maybe even stocks within certain sectors. And in other sectors where there's been just an incredible move up for the last 2.5 years, there is very little energy, even in the bounces that we've seen so far. So if that is the case, then what we're looking at is that this is a trading range, like a rectangle formation, and a decisive break above one of the levels will say that is a breakout of consequence. And as a breakout of consequence, I have to quickly go to the S&P. In the S&P weekly chart, I have at this particular point, I can make excuses, I can do things, but I cannot change what is. And right now, I've got a peak B in the Chapman wave methodology at 1883.97 made in the week of the 21st of March, that I can't, there's no other way to count it within the Chapman wave methodology. Well, there might be, but it's not what I would call legit. In other words, I'm form-fitting. I'm changing the rules to fit the game. I can't do that. You know those kids, they start playing a game, and then someone points out the rules, and then they want to take their marbles and go home, or they want to change the rules. Well, we can't do that here. So I'm looking at this and I'm saying, hey, this is a good high-level consolidation in the S&P because of today's actions so far. Instead of being under the 9 EMA of 1850 down in the 1840s, it's way above. It's 22 points above. That's really important. Getting back, in fact, the Friday high was 1875.92. Today we've gone to 1874.04. We're just within a point and a half of trying to pierce that level. And if it does go to a new all-time high at 1883.98, 1 penny above the all-time high, that starts leg C. So we've put stops in my opening call on the short positions. If those stops get taken out, I respect them and say, hey, you're showing more strength than I anticipated. But that's not to say that we haven't got long positions, and those long positions are working very nicely. And all I can say is, if your long positions are doing well, and the short positions are doing well, that's a mixed market, and that's been happening up until lately. Today, we're now more on the long side than the short side. I'm not complaining. I'm just saying that's the fact. So here we go. Let me run the numbers, and I'll run it with the chart formations as I see it in the Chapman wave methodology. Let's go to, so now the Dow is attempting to test the S&P. Let me just go to the Dow. I want to go through the Dow first. Dow, IMDU. So the Dow is at the new recovery high in leg D. So there's your A. There's your B. There's your C, and a very quick A to B to C to D. And whenever I see this pattern, I say, okay, be a little careful here. Certainly in the Dow, this is one of the quickest from peak A to D's that we've had, from the low bar even. Here we are. And I even have to put an up arrow, because once you get to D, you've got an up arrow no matter what. So what we've got here is an opportunity for the Dow to challenge the 16,505 all-time high. If it does that, it becomes leg B/E. I'm giving it preference then to B instead of an E, just for at least the moment, and saying, hey, that's very good action, and it's leg E in the monthly chart. Where does it fail? If any time this week we take out the low of Thursday, 16,191, be real careful, because 16,000, between 16,100 and 16,000, that is sacrosanct. That is absolutely imperative to hold. Now, let's go on to the S&P. We just did the S&P, but I'll just give a heads up. I didn't talk about the downside. On the downside, if we take out the low of 1842.11 made on the week of the 27th of March, be careful, because it'll be that H pattern that goes to test the recent low of 1839 made on the 14th of March. So I have that very clear. Those are the parameters to watch, and a break on the upside. As I said before, the upside has certain levels, 1875.92, then 1883.97. Once it's above that, that is in fact the all-time high. That was an E/B that I've got right now in the daily. The weekly chart, I guess I have to just call it a bullish chart, because the weekly chart is not giving me a signal in the notation of the Chapman wave of a pullback. The weekly chart technicals I've improved today, because the stochastics at 84% and the MACD is getting closer, but it hasn't yet crossed positive, but it's only the very first couple of hours of the trading day. So that's what, and the monthly chart so far, there's nothing wrong with that. So now let's go to the IWM. The IWM is in fact the Russell 2000 ETF, iShares. Very poor action lately. It's failing miserably. Peak E in the daily. It needs definitively at 116.43 to break into the 118.50 area for me to say, whoa, lagging, but still has a chance to make new highs. Weekly is a peak D, and monthly is a leg E. Today will confirm a long-legged doji candle if it closes anywhere around here. So that's that Qs, 1, 2, 3, the QQQ series. Also very poor chart. Why? Because the IBB impacted the NASDAQ biotech sector ETF, impacted the Qs and the S&P very badly. And peak D in the daily, peak D in the weekly, and leg E in the monthly, and not a great candle, but the MACD and stochastic are still holding well, but there are signs within, and I'm going to be doing a lot of this work on, let me just show you right here, go to the front page of TFNN, at my Master Trader Series Level 2, and this is Level 2 on the Chapman Wave methodology. Implication is that you've already done either you've read my CD introducing the Chapman Wave methodology. If you've gone through some of my webinars and you're actually using my methodology, but you don't have the CD book, we will send it to you as soon as you sign up. Boom, you'll have it overnight. We'll try to get it to you, and then you'll have time. I'll go through whatever the charts are. We'll go through them in great detail, but it's something you should have. It's live in the Boston area, Saturday, April the 5th. 8:30 in the morning until 4:30, and believe me, the accommodation is fabulous if you have to stay overnight, and the food is terrific. I always talk about the food. So, okay, now let's go back to the charts. This is going to be very interesting. I didn't really get to the divergence, but in the triple yield chart that I always show my subscribers to my opening call, my very comprehensive daily newsletter, I showed that it was a very rare peak G at 39.74 on the yield, right there on the week of the 3rd of January. When you pull back and you break to lower lows, that's saying something, and it's saying right now that the 30-year is in a trading band that it's been in for a long time, but if it was to break below 34.94, the low of last week, that'll suggest bonds are actually going quite a bit higher. The 10-year note is just stuck in a trading range. If anything's making little oval patterns, I'll be watching to see if there's a break to the downside or the upside. And the levels to watch are 28.21, 2.81% on the upside, and 2.579 on the downside. But look at this. The 1777, 1786. The 5-year note diverges. It is going up, and it's going up strongly. It's made a new recovery high. That's like a leg E, and this is a brand new leg C. That means it's going even higher after this. I'm going to be watching this because that divergence between the yields is going to be telling me a lot of stuff going on. When you go back to the divergence that there was when they overlapped a little bit, when they were going into the high of 5.408% back in June of 2007, and then it came down, the yields came down to 11.85 in the 5-year. It came down to 25.19, 2.5 from 5.4 in December of 2008. You've got to respect that this kind of divergence here, which you just don't see it very often, breaking to new lows, they go together, breaking to highs, they usually go together or close. So I'm going to be watching that because it's going to be telling us about the shorter term rates. So I'll be right back, and I am Basil Chapman sitting in for Larry. I'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I had a bunch of questions. Actually, I had a bunch of questions from the previous show that I said I would get to. Let me just get to those first. And the first one was USD JPY. This is the dollar, Japanese yen. And what am I looking at? Let's see, a spike to the upside, A to B, and I call it a gray A and a gray B because it's under the previous highs. So let me see before I make any decision here. I had an upside target for the USD JPY if certain things happen. Based on the monthly chart having made a peak C and getting closer and closer to the 200 period moving average. My suspicion is that the USD JPY, dollar Japanese yen currency pair, is trying to head towards the 107.61 level, 7% higher from here. It's at 103.09 right now. Less than that, 3.5%. Most importantly, what happens this week, based on the weekly chart, says unless 103.754, it's at 103.094 right now. It needs another 70 cents, 75 cents, let's say. Until that's taken out, it's stuck in a range, and the support that it has to hold is 102.55, 102.45, and 102.20. Those, it's a bunch. If you've got a cluster of support levels, I respect those. I said to myself, okay, a cluster of levels to watch. That means if it breaks under it, and the 120-minute chart in the, look at that, the 120-minute chart in the euro-dollar currency, in the dollar-Japanese yen currency pair says, I wonder if it's time to get back into trading these. I haven't done that for ages. It says two things are happening in the 120-minute chart. It's made a peak D. If there's no new high bar this bar, and I don't think there will be, the MACD is good but getting toppy, and the stochastics at 85% and pulling back with the RSI. I'm saying to myself, hey, good action, good spike, but it's got that Eiffel Tower look, and it says to me 102.80 to 102.85. 102.80, am I correct? How can it be that? 102.80, I'm sorry. 102.80 to 102.68. That's what I meant to say. That 68, yeah, between 102.72 and 102.68. That's going to be critical support. If it gets there and takes it out, that's going to be really tough. But all I can say is that from the pattern I'm looking at here, the weekly is improving. It's not great, but it's improving. And the daily is attempting with those. Look at all those green bars. It's attempting to push higher into the 103.50s. So it made an Eiffel Tower up and down move. Now it's trying to replace it with a retest. And if the dollar Japanese yen currency pair starts to trade at 103.495 and holds, it should retest the high. If it tests the high and breaks it, look for that the 200-period moving average in the monthly to start to kick in more and more as a magnet. And I talk about things as being a magnet. You know, a magnet, when you turn it around, it propels, and when you turn it the other way, the regular way, it attracts. So we're going to see which one it's going to be. So that was the question there. Those are the parameters. Next one was, thanks, Basil. I'll do the best I can to make your Master Trader series. Okay, great. I hope that works out. A dollar call. SPX buy is 1865 and 1850. The S&P right now is at 1873, and the futures are at 1866. So yeah, this is the way. Let me just show you something here on a short-term basis. Look at this. In the 2-minute chart, it went under the rectangle formation, and it tested what? Look at that green line, that 200-period moving average. It's just, how does it know that that's the 200-period moving average? Well, you know what? It really does know, because the 200-period moving average is made up of the look-back period that you've chosen. Therefore, it certainly knows. It's an internal indicator. That's why I love it so much. You don't need it until you need it. And right there, you needed it and held. I didn't go long, pity. And it's a very nice move in the 2-minute chart. So how did it impact the 5-minute chart of the E-mini? There's the 10. I wanted the 5 right there. The 5-minute chart, I haven't updated this one. All right, I'm not going to waste time. I thought I have it on another screen updated, but it's taken out the old high, and it's made a new recovery high in that particular 5-minute chart. Next question. I go back to the den. SCTY. I want you to look at this as well. This is what's his name's company. There you go, Musk. Oops, I hit the wrong thing. Oh, we've got a break coming up. We've got a break coming up, and the Dow's up 143, S&P's up 16. Basil Chapman here for Larry Pesavento. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I'm Basil Chapman, and I'm looking at Tesla. Question of the den. Tesla looks very weak. I suspect Tesla needs a timeout, just a very important timeout. Not a problem, but it's at 208. I would not be surprised if it pulls back between 202 and 195 over the coming weeks, and it has upside strong resistance in the 220 to 225 area trading range. Let's go to Nahid in Safety Harbor, Florida. Hi, Nahid. How are you?
Very good, thank you. How are you?
Very well, thank you.
Would you please look at JNPR?
Juniper Networks, right?
Right.
All right. Oh, another one that I seem to have lost my notation, and I even remember it doing just the other day, but it takes me 2 seconds. There we go. A monthly chart. A, B, C. Folks, I want you to count how many times do you hear me talk about a chart, and then I say at peak D, the fourth highest peak from the most obvious lowest low bar, it has the deepest retracement. Juniper went from March of 2009 at 1243 to 4501 in March of 2011. It makes an A, capital A, uppercase A, straight up, straight down pattern, goes down, retests the 1401 level, and now it's in leg, this is actually peak C, in a retracement from that low, and the 200-period moving average is at 27.28, which is a little bit of a magnet right now. The weekly chart had a really... I'm going from here. Let me always double check that I got the low. Yep, that's the most obvious low bar right there. So that's A, peak B, peak C, peak D, pulls back, plop, comes back down, and another one in the weekly starts at about the 15 area and goes to A, B, C, and D, plop, This really loves D's, doesn't it? And in the, oops, and there was a mistake. In the weekly chart, it's gone to an A, right there, A, B, C, and now it's holding at a higher level. And I'm going to kind of keep calling it C for now, although it could have been a C1. I'm going to do this. Keep peak C1 and peak 2 just a minor failure, and I'll explain that now. It went to 28.75 the week of the 24th of January this year, and then it went to 28.39 the week of the 21st of February. So you've got 39, 28, what did I say, 28? About a 40-cent difference, even less. So that could be a peak C1, C2. So this is what I'm looking at here. Technically, on the weekly chart, it's holding well. The price is holding well, but the technicals are deteriorating. In the daily chart, most recent low bar of 25.09, so peak A, the peak B, and gave back a lot, and now it's trying to hold. I'm looking at this and I'm saying, based on the performance thus far, there's a really good chance that it's going to try to test the 25.09 level one more time. If it takes out 25.32, this is a really good chance. Not only will it test 25.09, but the gap, if you look at a couple of gaps, but if you look at the gap that hasn't been filled from 24.80 on the 11th and 23.93 on the 10th, that's the area that I'd say that it's targeting. Now I'm going to ask you, Nahid, what is your plan? What are you doing?
I would like to short it.
Okay, so I'm going to make the recommendation that says I'm agreeing with you that from what I'm looking at, the short position is the way to go. What I'm not going to suggest at this particular point is to do anything just yet. And I'll tell you why. You're going to be giving up maybe 50 cents on either side. If I say to you, wait for a bounce, I'd still say maybe a 50-cent bounce. If I say to you to short it, I'd say 50 cents lower, I'd start thinking of shorting it. Right here at 25.91, you see, if you're looking at the MACD and the stochastic on the daily chart, now I haven't done too much work on, I had, but I haven't got it in front of me. You'll see that there's a divergence between the stochastic pulling back, but the price is held quite well.
Right.
And the MACD is flattening out and really not, it's kind of ignoring the most recent pullback. There's a bit of a divergence there where it's trying to hold very well even though the prices come back. So there is a chance that if, after it doesn't look like it's doing much, but it's up it's up 1.13%, even though it's only 29 cents, and the Dow's up 0.84 and the S&P is up 0.87%. So relative, it's doing quite nicely today. So here's my recommendation. On the short side, I would only go to the short side if from the moment we're speaking now to tomorrow afternoon, if it takes out the 200-period moving, the 9-period moving average is at 25.82. If it takes out 25, I'd say 70, but I'm going to give it a little room. 25.60, even if it's just intraday, I wouldn't even wait. I would then put a short on. And my short would have a stop, very strict stop, above today's round number high of 26. If at any point today it takes out 26 or tomorrow it takes out 26, I'm going to be waiting. I'm going to say to you, don't do anything, because there is a chance that if it closes nicely today and it acts well tomorrow,
right,
that it's making, it's always very difficult to explain, but there's a symmetrical triangle pattern in the daily chart. I'm drawing it in now. It's more asymmetric because the angle going up is much weaker than the angle coming down. And it says that if it closes anywhere above 26.10 or 26.20, then the candle on the left, which is at 26.37, that'll become a target. So I think you can wait on the short side unless it gets to 25, what did I say, 60? Yeah.
Yes.
Under 25.60, I would then think of shorting it because that would be a failure pattern especially on the 120-minute chart. But I don't want to get you into this too soon for two reasons. One is these triangle patterns says that if the left side breaks, just keep looking at each higher peak on the left. If it breaks on the downside, keep looking at the left side lower trough on the left. It's a very simple process. And right now it says that if it was to break to the upside, it's not a big deal, 26.37, but it means you're on the wrong side, because it's going to start to help the weekly chart. And if by end of the week, Juniper, instead of taking out 25.32 on the downside, takes out 26.40 on the upside, that's making a cup formation. So I'm right on the cusp, and I'm saying to you, my eye says that it should be coming down, but my technical analysis, no, don't be too sure of that, because if it breaks to the upside, it could still have about 70 cents or 80 cents on the upside, and that could even start to strengthen. So the risk is that if you're wrong, it could go up quite a bit more. The reward is that if it breaks down under 25.60, there's just a really good chance that it test each left side low bar. So I hope that helps you in the explanation of what I'm looking at.
Yes, that was great. Thank you so much, Basil. I appreciate it.
Thank you very much for calling, and let's see how that one goes. That's Juniper, Juniper folks, Juniper Networks, trading at JNPR, trading at 25.90. We were looking at it for Nahid and Safety Harbor. Now let's go back to our questions. Larry is asking about not Larry Pesavento is away, but Larry, who emailed me asking about SCTO. SCTO is a company that I believe it's owned by Elon Musk, who owns Tesla, and someone, did I get that right, who said that his cousin is running it? Well, whatever it is, it had a spectacular move. Now, I'm going to mention something. This is anecdotal, but I think it sells a story. I got about a month ago, I ring at the door, and I go down, and it's a young man, young woman, and they are representing a company embraced by the city of Newton, and they're going house to house just about, and they're talking about solar energy and all sorts of energy, how you can cut your bills and all sorts of things. And then I said, well, thank you very much. I'm not that interested. I've just had a whole bunch of stuff done. I don't need anything. Not only that, I don't know how long I'm going to stay here and all that stuff. I decided just to talk a little bit with them, because, I mean, they were doing their job, and I thought, okay, fine. Then I received something else from the company, from SCTY, which is Solar City Corporation. I don't know if I kept it. I think I did. And I said to myself, oh, my God, this is the utility companies. These guys are really smart. What you do is you go to every city. You can go to how many cities are in the United States? I bet there are more than 5 or 6, right? I bet there are more than 500 or 600. I bet there are more than 5,000 or 6,000. I bet there are more than 50 or 60,000. You go to every one and you make a deal and you say, look, it'll be good for you. We'll give you a little percentage and all that. And we will just help everybody by giving them the alternative energy. You give us our I don't know what they get. They get points, or they get this, or they get that. But they're going to get something. We're getting snow. I don't believe it. We're getting snow. I'm sick of the snow. Come on, stop it. And we've got a deal. You got tax credits. You got all sorts of things. Wow, is that not a plan? However, when I'm looking at the chart, I'm saying, but shorter term, they got a little problem here. They made a peak D in the monthly, because there's no way by the end of the day, in the next 5 hours or whatever it is, there's no way that SCTY, Solar City Corporation, Solar Energy, is going to break above 88.35. It's at 62.54 right now. In fact, I don't even think it's going to break above the 9 EMA at 64.54. But there's a bounce material here, and then I think it goes into a trading range between 68 on the upside and 58 to 52 on the downside, but with a potential over the next 2-3 months to make lower lows and lower highs. If 54 is taken out, and that is the 54.79 is the 200-period exponential moving average. Why do I say that? Because of the steepness from peak E in the Chapman wave, the weekly chart is made, and that consolidations have taken time. Not always, not so much price. The last one was from peak in the week at 52.77 to 28.31. Oh, I would say that 52 to 28. That's a good 40% decline. That's a pretty big decline. Now we've gone from 88.35 a week of February the 28th to last week's low of 56. That's 30 points. So I suspect that there could be a bit more of a bounce, and then we come down, and then we come back and we test the low 50s. That's what I'm looking at right now. So the question was Solar City. No, I'm looking at this because I would like this at some point for my subscribers. We've missed a couple of good opportunities that I could have taken. I chickened out, and we did other things instead. I don't think that was a good idea. I think that was a mistake. I would have liked to have gotten a feel for both how I personally trade Solar City, that is me and my subscribers, and how the price actually reacts to the different peaks. Does it make? This was a peak C1, C2. That's unusual in the Chapman methodology, but it worked very well as a cognitive factor because the MACD started to turn down later and the stochastic was already pulling back. On balance, volume reversed. Now it's trying to form some kind of support. So yeah, on a trading basis, if you're looking for a 2-3 day trade, it's up 112 today. That's up at 1.82%. I say you could nibble on it here. I would put a very tight stop. Nibble meaning at 62.52. I would have a stop at 60.50. That's 1 point stop. Why? Because if this is going to succeed based on the 120 minute, oops, wrong chart. Based on the 120 minute chart, it has to take out 63.76 by this afternoon or tomorrow. If it doesn't do that, I'm saying, okay, I'm out. So for a 1 point stop, I have a 2 point possibility. It could even be 4 points if everything comes together very nicely. Then it makes the H pattern, I suspect. 68.29 is the 9-period moving average. I don't think this move can get there. And then I think it starts to turn around and it comes back and it starts to make the bottom of Thursday's candle. That's at 56.62. So that's 6 points down. That's a lot. Gee, these are big numbers. I didn't realize it was trading in such big parameters intraday. Okay, now the next question. Yeah, so in other words, Larry, from your question, I have a feeling that where do you see support on the weekly? The weekly support is absolutely between 54 and the 52 level. 56.62 is the low of last week. And 56 to 54 is what I meant to say. 54.79 is the 200-period moving average. And I just have patience if you want this as a longer term. If you want it as a quick trade, you could just put it to get a small position and a tight stop. That's all. Next question I had, let me just check. Nope, nothing there. So now we're going to go to the next question here. Okay, that's, good question. All right, so that's that over there. I think I've dealt with those questions. Now, the other question in the den was, check out UTX. Is that for me? Yeah, I will look at UTX and go there right now as we go to a break. Basil Chapman sitting in for Larry Presidente. I'll be right back. Nice action, not great. I'll be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. Basil Chapman. We are back, and I just wanted to go through this. Jones, what is this? Jones, Lang, LaSalle. All right, A to B to C to D to E. Oh, and I've got all the, and they're not capitals. All right, sorry about that. That's an E and an F. Yeah, so, okay, I like the chart. I think it's getting a little toppy now. This is JLL's symbol trading at 118.57, up 107. I've got an alternate count. I'm calling this D for now, but the way it's acting, I suspect it's going to make a little U-turn here in the MACD, and it's going to try to bounce one more time, and it should make official, instead of the phantom peak that I called it at November of 2013 and the week of November the 22nd and November the 29th at 98.43 and 98.46, 3 cents higher. I've called that a phantom peak. Everything about it looks like it should be pulling back, but it's holding well with the MACD not yet crossed negative, and stochastic still at 80%. So the question is, what about it? What's it doing? And I say that arch formation in the weekly, that absolutely, wow, what a perfect rounding top and a rounding to the right side. And now it's trying to find some support. I suspect it could bounce, and it's going to bounce. If it does bounce from 118.61, it'll try for the top of the candle of 120.56. If it fails after that, be very careful. But if the stochastic bounces from 11% to 15.5 or 17%, that would be very good action. So in the meantime, back to the ranch, I just have to tell you, I don't do nothing right now. I think you have to wait a couple of days to really short it again. So let's do this. I'm going to, what was that? Did I have a question here? Did I have a question? I got a phone call, I know, but I'm not taking that. Yeah, okay, so that's what I wanted to look at. And then the other question that I had in the den is UTX. Yeah, UTX, you see, UTX is actually acting quite well, but it isn't really leading per se. It's just acting well and is holding very nicely. I would suspect that if UTX, which is United Technologies, trading at 116.36 up at 158, is able decisively to take out 117.60, the candle of the 21st, wow, that'll be very impressive. I don't know what it'll do. It'll change my wave count if it breaks into the 119s. It'll be very impressive, which is not too far away. All I can say in the next 2-3 days, if these stocks start to turn down, be very careful, because then the pattern says high-level consolidation, but starting to fail. Now, here's the other thing. Triple M, 3M, trading at 135.76 up at 156, is in leg D. Now, remember we had a caller the other day, I was looking at GE, spoke to him, and I said, well, I've got it in D, and it says within a couple of days, the GE should be pulling back a little bit. So GE is up only a penny right now in leg D, and I suspect this is a different chart, but it's still a very quick in the Chapman wave, A to B to C to D. And the quicker you get there, the quicker you have a pullback, not a major turn. That's something else. But it does say be careful, because GE could quickly pull back to 25.69, 25.60. That's going to be a very big cushion. How it handles that because of the weekly chart. So let's go back to the very quick leg A, peak A, leg B, peak B, leg C, peak C, and now leg D in the Triple M chart at a recovery high, but not an all-time high. All-time high was 140.43. All I can say is this is really good action. The MACD is very good. Stochastic's at 73%. I'd like it at 80%, but it is good. The weekly chart is the one that makes me a little nervous. It says that, it's okay, but it's not great. And the monthly chart is still very good, but the MACD is flattening out, and the stochastic at 87% is starting to turn down. I'm watching for April, the on-balance volume. So we're about to wrap up here. And as I said, I'm sitting in for Larry Pesavento. Check out the front page. If you're interested in the Chapman Wave methodology, go to the front page of TFNN. You'll see it right here. The Master Trader Series Level 2 by Basil Chapman coming up this Saturday, April the 5th.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.